let's move on from that conversation and put the spotlight on Capex, both government and private. See what the state of Capex is right now and how this GST rate rationalization could actually play out on the entire Capex theme. We have Vinayak Chatterjee, founder and managing trustee at the InfraVision Foundation, joining us on the show. And Mr. Chatterjee, hi, morning. Thanks so much for joining us. Help us understand how you expect this entire GST boost to consumption to play out for the overall economy, and what would the role of Capex be, both government and private, going ahead?
Fair enough. So Capex is not an easy subject to deal with, and I will tell you my conclusion, and I will build up to that conclusion, that there are mixed signals. There are a bunch of positive inputs that are coming in, and there are the overhang of some negative scenarios. But let's look at so therefore the conclusion is that the Capex is right now giving mixed signals. Let's look at the positives. Yesterday, and in the Economic Times, the Chief Economic Advisor of the State Bank of India, Dr. Soumya Ghosh, was very, very bullish on increasing Capex by the private sector. And I'm going to read out what he said. Investment announcements by private sector have significantly increased. In Q1 FY26, total announcements of rupees 19.1 lakh crores have been made vis-a-vis 8.6 lakh crores in Q1 of FY25, registering a growth of 123%, a quarter of which came from private sector. So Soumya Ghosh, who has great insights both as an economist and as an advisor to the largest bank in the country, is positive about a fairly substantial uptick in Capex. Let's look at another signal. About a few days back, there was a fairly large interview with the chairman of L&T, and there he was very categorical that L&T's order book has exceeded 6.12 lakh crores as of June 30th, 2025, which, as per the chairman of L&T, marks a new milestone for the infra conglomerate. We are aware of the fact that 46% of L&T's order book comes from international, but he has even went out of his way to say that domestic projects were also contributing significantly to the increasing order book of L&T. Let's take a look at another research input. Axis Securities Equity Research says that core sector data released by the central government confirms an 8% year-on-year growth in cement. Now, why am I picking up cement? In my view, over the last many years, when I have spoken to you and your viewers, cement is the best surrogate indicator of Capex in the economy. There is no better indicator. And when Axis Securities says that it confirms an 8% year-on-year growth in the April-May period of FY26 over FY25, and says that cement growth is expected to grow at 10% year-on-year. And the final positive sentiment is that GST is expected to not only reduce the GST on cement from an irrational high of 28 to about 18%, which would, I think, cement has very high price elasticity. So hopefully that would result in a far higher push to the Capex story. And in case the GST reduction leads to a higher consumption demand, then many people who are holding their Capex in terms of increasing their size of their factories and capacities might take more favorable decisions. The last favorable point is that the order book of EPC companies are at a high. CRISIL says that the revenue of large infra EPC companies is expected to increase by 9 to 11% in this fiscal year. And these are companies like KEC, Afcon, Tata Projects, Shapoorji, Palonji, Sterling Wilson, etc. Now, when you add all of this together, you get a whole bunch of very positive signals about an imminent and significant uptick of Capex in the economy. But is that the complete story? I started off by saying that my conclusion will be mixed signals. Now, let's take a look at the negatives. Yesterday, Business Standard newspaper carried a headline item on the front page saying that Indian chief executives remain cautious about the prospects of a strong revival in private investments. Obviously, the reasons are known to most of your viewers: global slowdown, export slowdown, impact of Trump tariffs, wait and watch on investment decisions till the uncertainties kind of play out. The second point, so this is a negative that Business Standard has pointed out as distinct from the very strong positives I pointed out earlier. Please also note that in terms of on infrastructure, there is public expenditure and there's private expenditure. Public expenditure is between center and states. As all of us know, the increase in the union budget last year for the budget for this year was 0%. And I personally believe that is now beginning to have an impact. Over and above anecdotal evidence coming in from states about both a slowdown in projects as well as an increased cycle in cash releases for construction work, which means that delayed projects and delayed payments are showing up stress in the infra capex story. There is in the real estate side, there is evidence of an overhang of supply side issues. And if you're looking at private investment in India's infrastructure in greenfield, where really the capex is warranted other than brownfield, which is just an exchange of capital, there is no great revival of PPP, the infrastructure space where large dollops of private capital will come in. We are waiting for the privatization of some terminals at ports as well as a batch of new announcements on airports, etc. So therefore, looking at all of this, the positives and the negatives, Capex is giving a negative signal, and therefore it is difficult to say what the next quarter or the next 2 quarters will look like. We'll have to wait for the figures. The last point that I want to make is that historically, we were looking, normally investments in infra were looking at traditional sectors, road, rail, energy, real estate. But what your viewers need to understand that there's a whole new segment of new investment opportunities that have come up for investment both by public and private sector. Hydrogen, renewables, pump storage, battery, EV charging, semiconductors, chips, data centers, space applications, nuclear energy, metro expansions, and the fairly large expansion once again on coal thermal. So these are the new areas which need to be tracked, but I'm concluding my answer to your question on Capex by saying mixed signals, wait and watch to see how the positives and negatives interact to either give us a net positive or a net negative. But over to you.
Okay, Mr. Chatterjee, really appreciate that detailed explanation that you've just laid out for us and our viewers. Very quickly, before we let you go, in just 1 or 2 lines, if you could explain us the timeline by which you see private Capex kicking in or the revival on this front?
I would say the signals will be very clear in the next 2 quarters.
Okay.
So I would look for definitive data by end December.
All right, we'll definitely watch out for that. But with this, Mr. Chatterjee, we would like to let you go. Thank you so much for taking the time out and speaking with us this morning.